Hi everyone, this is Rob Roy and welcome to the Elliott Wave Options U.S. Market Update. Well, by now, I imagine all of you are aware that we had that incredibly high CPI number come in at 9.1%. Our speculation on the media outlets is constantly that inflation has peaked. We've heard it for like 3 months in a row now, and it continues to go to the upside. So it hasn't peaked yet, and now we're starting to get some chatter. Will the Federal Reserve jump to 100 basis points? 75 basis points are priced in. There's about a 28% chance of a 100 basis point rate hike in their next meeting. Retail sales came out today on Friday, and it was surprising in the fact that it was positive. Even beat expectations, which were for a 0.9 increase, and it was a full 1%. It was negative for the month of May. So that buoyed the market. We finished to the upside today, but the consumer sentiment report came out at 51.1. That was slightly better than expected, which was 50, but it's near record lows. Now, one of those two things has got to give. When you think it just doesn't jive, how long will the consumer continue to spend with confidence so low? At some point in time, if things don't change, consumer confidence being so low, they're going to stop spending, or at least stop spending as much. However, was that positive number on retail sales enough for that next GDP report to show that maybe we eked out a little bit of a gain in the second quarter, that we don't have our second quarter in a row of negative GDP, which is the official definition of recession? That's going to be interesting to see. That report comes out on July 28th. All right, with all that said, let's take a look at the charts. At the time of this recording, it's late on Friday evening, so the futures market is closed. Before we look at the charts, please don't forget to hit that like button, or better yet, hit subscribe, and be notified immediately when one of these videos is posted. And periodically, we do live stream these videos. Thanks, we appreciate it. All right, taking a look at the charts, you can see the market did move to the upside today. A little bit of a gap higher even on that slightly better than expected retail sales report I talked about in the intro. In Tuesday night's TradeFinder, we talked about how the market needed to stay above this 380 level. And the importance of the 380 level is pretty clear there from recent support resistance. We tried to break below it without really any sort of follow through and gap back above it today. I hate the fact that there's that little gap there, but there is. So when you see that, you obviously want to see, where's the volume? Did the volume come back in? We've been talking about lower than average volume for quite a while, and no, not even average volume on the gap to the upside, which makes that a little bit suspect. If we can get some follow through on that on Monday, maybe we have something. I mentioned TradeFinder. We do that every Tuesday night. It's free. We talk about the markets, we look for trade ideas, and we have a live Q&A. You can register underneath this video or by going to our website at ewotrader.com. Love to have you. It's a lot of fun. Great interactive community that we have as far as our TradeFinder viewers. All right, so the key will again be Monday. Do we have follow through here? Can we make it back up towards that 50-day moving average? And in TradeFinder, I was talking about how, forget 420, which is really where the resistance is at that wave 4, can we get up to 400? And so talking about how we did have a 38.2% wave 4. We talked about this in the last weekend's recording on the live stream, and roughly a 61.8% fib extension. Could the bottom be in? It could be, and if we can put some distance between the market and 380 to the upside, that gives us a better opportunity that we could stay there. When we take a look at the chart of Canada a little bit later on, you can see they surprised their market by going with a 100 basis point rate hike, something that's now being talked about a little bit from our Federal Reserve. Man, the Canadian market didn't like it when they did that, so will the Federal Reserve take note of that? Will they stay with the 75 basis points, which is pretty much priced in? There's about a 28% chance of a 100 basis point rate hike priced in if you're curious what the numbers were. So if we hold above 380 here, we look to run up towards 400. If we break back below 380, then we look to move down towards that wave 5 low. It's still labeled there. There's still a possibility that we make a lower low. I think a lot is going to depend on what happens on that next GDP report. The fact that the retail sales report was slightly higher than expected, does that mean that perhaps we actually have a not official recession, meaning that the GDP number comes in to the positive side, because when you have 2 consecutive negative GDP quarters, that's the official definition of a recession, even though, as we all know, it feels like it. Last month's retail sales report was negative, and so to have at least a positive number of up 1% this month was a big deal. So lower volume, gap to the upside. The gap probably gets filled, but look where it is. It's right at 380, so we could come down and fill that gap and still move higher. So we have to respect the opportunity of a continued move to the upside next week, and maybe we just do that until we get that next GDP report on the 28th. Let's take a look at the VIX, because that's pretty important. This move to the downside here, breaking out of this trend here of higher lows that were being made. Just barely made one here back on the 8th of July, but moving lower, significantly below 25 now. Does that give the VIX the move back down towards 20? Could that help to sustain a rally in the markets up to at least 400 and maybe 420? There's our 19 level that we've been talking about. 1920, somewhere in there is where the short-term support is. But Monday's key, so you're already seeing that Monday's going to be a very important day for the markets. Looking at the TNX for interest rates, look, we're forming a little bit of a triangle here. It's been a little bit confusing since the completion of that zigzag pattern here, and I'll show you that. We actually have a really nice zigzag when we get to the chart of oil too. You'll be able to see almost the identical type of chart here. Look at that extension right down to 100%. Really nice ABC zigzag pattern there. Classic fib levels with the 50% B wave correction and the 100% extension, as you would expect, and then moving into this corrective triangle. So I'll take the zigzag back off. Which way do we go? The fact that rates have been coming down is a little surprising, especially in the face of some chatter of the possibility of a 100 basis point rate hike. I think money has been coming in, and well, it's clear, research shows that money has been coming in globally into our bond market. But there's a doji right there. So are we nearing the end of that? We're going to have some sort of a break in rates here. No question about that. It's a really well-formed triangle. So either rates break to the upside or the downside. I know y'all give me a hard time when I say it can move up or down. It's not playing both sides. It's how a triangle works. When you have a triangle, you don't pick a direction, or you're just guessing. It can break to the upside or the downside. We'll just wait and see. We have a 38% Fibonacci level there that acted as resistance. We came back down to the previous 4. That's what's supposed to happen. And then when you complete a 5-wave pattern, you go into a corrective pattern. Again, classic Elliott wave stuff. That's what's supposed to occur. And then you have one of the corrective patterns, a flat zigzag or triangle. And in this case, we've had 2 of them. We had the zigzag back to the 4, and now we're consolidating into the triangle. Really cool stuff when you see that within the Elliott wave and Fibonacci world. The dollar backed off a little bit on Friday, which I was happy to see. We've talked about this Thursday night in our insiders meeting. That's for our alert subscribers only at EWOtrader.com. We have an extended period of Q&A, but we talked about how, and you've heard me say this before, I am a fan of a strong dollar, but not this strong. It's getting to the point where it's really damaging international companies from the currency exchange rate. Do you remember the days when every country seemed to be racing to devalue their currency because of more beneficial profits for international companies due to better exchange rates? But now with the dollar powering higher, and this move here just looks a little bit vertical to me coming out of this triangle. And I don't like it when things go vertically, because what goes vertically up often comes vertically back down. So maybe we get a little bit of a reprieve here. The wave 5 smack dab in the middle of this tap box. Hit the target dead on the nose. Right there, the tap box stands for time and price projection. So, man, you couldn't have hit that target any better. A little bit of a back off. We were overbought, as we talked about Thursday night, and that's from the 10-day moving average. Remember, no security in any time frame gets very far away from the 10-day moving average. So a little bit overbought. We came back. So the question comes, is this just a correction back to the 10-day moving average? Does the dollar power higher, or are we going to correct back down? At some point, we will retrace the breakout of that triangle. Triangle breakouts always get retraced. Doesn't always happen right away. Sometimes it can take some time, kind of along the line of gaps. Gaps get filled, but sometimes immediately, sometimes it takes a while. Same type of thing with the breakouts of triangles. But if we can get the dollar to weaken a little bit, maybe we can finally get something decent out of the metals. We'll take a look at the metals here in just a minute. But for now, let's go ahead and look at the diamonds. You see the diamonds here. You can see that we gap to the upside there on the diamonds as well. Here's the 10-day moving average. So back above the 10-day moving average, but importantly above 310. So where we were looking at 380 on the SPY, looking at 310 here on the diamonds, above the 10-day moving average, but there's that gap again. Now with the SPY, remember, we could fill the gap and stay above that important level, support resistance level at 380. Not so on the Dow. If we come back down to fill that gap, then we break below 310. Can it come down and fill it and jump back above it? That's going to be the question that occurs there. Looking at the Qs, also a gap. All the markets gap to the upside today. I think people were really surprised by a positive retail sales report and a slightly better than expectation one. But we have a really nice corrective triangle here following this 118% extension. So do we go down to 161.8, or can the Qs mount some sort of a run here? Let's see what kind of volume we had there. So if we bring the volume chart up, almost average volume, slightly better than what we had on the SPY. And the question will, can we follow through? We've got a breakout attempt here to the top side. Can the Qs lead us out of this? Perhaps, because they were the most oversold market by a long shot. The SPY and the diamonds had a 61% extension, 118%, almost double the wave 5 extension on the Qs to the downside. So what's most oversold likely could bounce a little bit more. I still say by the end of the year, we'll look back and the Qs will have underperformed, but it wouldn't be surprising to see them give us a little bit of a bounce. But again, back to Monday. Can we get a follow-through day on the Qs? All right, let's look at oil. Oil's that zigzag that I mentioned to you. Here it is, right here. Really nice looking zigzag pattern. And there we are, right to the 100% level. So we moved up, hit right at that 61%. That's my favorite fib level. I think it's the strongest one, and it worked there. So we hit that level. We came back down. Another really nice zigzag coming back towards this previous 4. And you've probably seen a little bit of relief at the gas pump. That's been nice. For those of you like me that still have carbon-based emissions engines, combustible engines rather than electric cars, but pretty nice zigzag pattern there. So you can see that 100% extension. We hung there. We tried to break down below yesterday, but came back above it. So I'm curious, what are your views on oil? Is that it? Is oil done? Do we break to the downside from here? Do we go down to 161.8% extension and break below that wave 4? That'd be nice at the gas pumps. Or, since we've completed that zigzag pattern and we're back roughly to the previous 4, is that the end of the correction in oil and we turn and head back higher? So what are your thoughts? Do we go higher from here or lower on oil? Please post a comment underneath the video letting us know your view. I like it when we interact like this, and it's always great to get opposing views. Some people think one way, some people think the other. That's what makes markets. If everybody agreed, then the markets wouldn't function properly. So here's gold, and I talked about how if we could get some sort of a move down in the dollar, perhaps we finally get a rally in gold. We broke below this 165 level, which we talked about in the past needed to hold. It didn't, and so there's the break to the downside in a pretty darn strong wave 3. But look, a little bit of a doji here. So if the dollar does pull back, maybe we bounce at least just up to the wave 4, and note where that wave 4 is. Right in the middle of a whole bunch of consolidation and congestion there. So right there, just below 175 would make sense. We'd hit some resistance there, so perhaps at least we get a bounce, label that wave 4, and then we see what happens from there. But it's not going to happen unless the dollar weakens. And if the dollar can weaken back down towards its previous 4, maybe that gives enough room for gold and the other metals to have some sort of meaningful bounce. It's been a while since there's been a meaningful move out of gold. You can see it was all the way back in February. Basically, we had a little bit of a blip in April, but not much. It's been pretty rough since then. Speaking of rough, looking at Bitcoin, however, 20,000. What do you think about Bitcoin? You can post a comment on that if you'd rather than oil. But do you think Bitcoin can hold this 20,000 level? You're hearing some commentary of it needs to go 30% lower, that this crypto winter could generate another 30% to the downside. Well, every time Bitcoin gets below 20,000, it manages to turn and come back. No follow-through day. We've closed below 20,000, but each time we've bounced back up without a follow-through day, and we're back just barely. The time of this recording is like 20,600 is the exact number, the time of this recording, but nonetheless, it got back above 20,000, and that's key. And the longer we can base here above 20,000, I call this the launch pad effect. Live on the Space Coast, so kind of tie that in with the space program. But it is a bit of a phenomenon that when you get these sideways moves, you get a bit of a breakout move. If it moves to the upside, we call it a blast-off move, but you get a significant move one direction or the other. Well, with Bitcoin, these sideways consolidations have yielded downward breakout moves. Maybe this time the consolidation moves to the upside again, or do we have yet another stair step down, continuing in this pattern where we go sideways, down, sideways, down. It looks like stairs. That's where the stair step comes from. But for now, again, the longer we can hold 20,000, the better chance of a break to the upside. But we'll see. Maybe there's too many people calling for Bitcoin to move lower now, and that's enough. You know, when everybody gets on one side of a trade in the market normally goes the opposite direction. Looking at some of the international markets, Australia, trying to get back above 21. It was able to do that today. Can it put some distance between 21 and itself there at the beginning of next week? That's going to be key. It tried to hold 21. It broke below it, but no follow through below it. So back to the upside here, and maybe it generates a bounce back up to the wave 4, labeling the wave 4. But it was good to see it back above 21 if you're bullish on the Aussie market. But the wave 4 labeled up around 23 would be a pretty nice bounce if it can get there. Well, there's that move down on the EWC yesterday. I was talking about when they did their surprise 100 basis point rate hike. Market didn't like it, and we bounced back up, filled the gap today. Look at that doji. So there's some indecision on the Canadian market now. 112% extension there. If we look at the 10-day moving average, you can see we are just a touch oversold. And with that doji, maybe we bounced a little bit more. But what matters on the EWC is getting back above 33. It needs to get back above 33. If it does, then maybe we can mount something to the upside on the Canadian market as well. But that's what I was saying. I was wondering if the Federal Reserve is taking cues on what happened. I think that surprised the Canadian Central Bank a bit, thinking that, oh, well, if we move to the 100 basis point move instead of 75, it'll show that, hey, we're really getting our hands around this. But that's not how the market took it. The market took it as, maybe they're trying to play catch up. You never know how the market processes things, but I think it was a little surprising to Canada of what happened. All right, looking at India, pretty nice move back to the upside here. The Indian market, you have to say, looks pretty good compared to some of the other international markets. It's held in here at this 39 level. We're right at a 61.8% wave 5 extension with that 38% wave 4 correction that occurred. Very similar to the U.S. market. In the percentages here with these primary FIM numbers, and moving back above 40 was key. So getting above 40, if it can put some distance there, then the next level it's got to get above is 41. If it can do that, then it's going to test that previous wave 4 high. So again, looking on Monday to see if there's follow through here to the upside, but pretty nice looking chart on the INDA. And then looking at Germany, I just was shaking my head this week on Germany. Just down, down, down. It has been just Elliott wave after Elliott wave pattern to the downside, with these 5s coming down, hitting their targets, then relabeling to a 3, which means new lows. Same things occurring here. At least a little bit of a bounce today. And if you want something to be encouraged about with the EWG, get above 22. It needs to get back above 22, and then perhaps it's on its run up to the wave 4. But look, it's got a lot of resistance just below that level of where the wave 4 would be in that 24 range. So it's got some work to do between now and potentially moving up and labeling that wave 4. And then I wanted to update you on the FXI just as soon as I was starting to say how China had backed off on all the regulatory issues that they've been dumping on all their big companies, and they seem to be getting out of the way. They were coming out of lockdown, and it looked like, hey, maybe we want to start looking at China. And then here they come with a whole bunch of financial penalties on their big companies, etc. They weren't substantial as far as, like, I think it was like $100,000 or $150,000 on Alibaba, which is like in their petty cash, you would think. It's just the idea of here comes the Chinese government interfering again with their big businesses, and the markets has had enough of it, and so back down we go. So I think that just takes the big China stocks off the market again. If the government's going to come back in with all their regulatory stuff, you just don't know. The market doesn't like uncertainty. We had a pretty nice ascending triangle here, and this kind of goes with what I've talked about numerous times with these triangles. Just because it's an ascending triangle does not mean it's going to break to the upside. Any of the triangles, descending, symmetrical, or ascending triangles, can break either direction, even though you probably hear educational material out there that says an ascending triangle breaks to the upside, a descending triangle breaks to the downside. The data just simply does not show that. They can break in either direction. That's what triangles are. So clearly, we broke to the downside out of the FXI. We had said that, hey, maybe a triangle here made a lot of sense and actually would have. It's just a shame of what's occurring here, just when it seemed like some of those China stocks could have been good to look at for trades because they were oversold already from all the garbage that had been going on. And now here it comes again. So I just wanted to update you on that. I hope everybody has a wonderful weekend. Look forward to talking to you again next week. Take care, everybody. If you like these recordings, I'd like to invite you to join our new TradeFinder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.